Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, April the 19th. My name is Eric Wilkinson. Yes, I am Eric Wilkinson. I just got my hair cut a little bit. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. Please take a moment to read over this disclaimer. Basically, it says, I don't know your risk parameters. I don't know what's in your portfolio. So therefore, I cannot give you investment advice. We're here to teach you some different option strategies that you can implement into your portfolios, but please do that in your own way. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on. Yesterday, let's talk about some economic data. Let's get the boring stuff out of the way first. And not a whole lot going on, but out of Great Britain, we saw some retail sales month over month numbers. Remember, we got a couple of those yesterday as well, but today the retail sales number came in at negative 1.2%, expected to be a negative 0.5%, so much worse than expected there. Retail sales pulling back. This stays with that mantra of the European region and emerging markets starting to slow down a little bit. That theory is still kind of intact. We also had Bernard speaking earlier today, who was an FOMC member. And Philly Fed manufacturing came out at 23.2, expected to be 20.8. So we're still seeing our economy start to, keep continuing to build while the emerging markets aren't doing so well. We're going to have to wait to see if that whole drags on the U.S. as well. Then we also got unemployment claims came in at 232,000. That was in line with expected. Quarles is speaking earlier this morning, or was speaking earlier this morning, and is done. And finally, we got the natural gas storages coming in at negative 36 billion cubic feet, expected to be a drawdown of 23 billion cubic feet. Obviously, the colder weather is putting a draw on natural gas across the Midwest, still getting snow mid-April. And then we also have Life and Master speaking, who are both, Master is a FOMC member, the member of the Great Britain's monetary policy, is speaking also later on today. All right, that's about it. Let's get rid of that. On to crude oil. Crude oil is moving higher. Yesterday, it blasted off and got back into the trend channel. I expect that to act a little bit more as support than the Fibonacci right now, this 50 Fibonacci, but you can see we kind of peeled above that. It did act as resistance yesterday, but I think we're going to get just above that and start trending a little bit higher. Everybody expecting with the United States more demand on oil for manufacturing and retail. That's going to push oil higher and gasoline prices higher. Gold futures coming off a little bit today by about $7 after it continues to rally in the face of the equities rally. Now it's a little weird. Today we're starting to see some weakness in equities and gold at the same time. We would expect those to be moving in opposite directions. We haven't been getting that as of lately. Now, Bitcoin right there at the point of control. We've been talking about this. It probably is going to want to settle down here, but it needs to get its groove on to get above 9,300 in order to get the bulls revitalized here. I still am believing that it's going to go down to 58.80, test that historical low here before we resume any type of bounce to the upside. VIX slightly moving higher. Still in the teens, which is good. It's not as quite as good as the 20s, which I'd like to see, but it is moving higher today, and that is due in part to the equities coming off. And we've been talking about this 23 Fibonacci level for the Dow Jones Industrial Average acting as a resistance and lining up very closely to the point of control. Now, I think the point of control is going to act more as a magnet than the 23 Fibonacci is going to act as a support and resistance. I think we could really see it kind of toggle back and forth there just because it lines up with the point of control here. That being said, we have failed twice, and today not looking too good in any of the equities after their moves yesterday. Let's look at the NASDAQ, similar situation. This looked like yesterday, without today's movement, like it was just a continuation pattern, a little bit of a stall, not really any type of doji that would give us an indication of a directional change. But today, a little bit of a confirmation here. Now, we have the rest of the day to kind of figure this out. Whether or not it settles below yesterday's low, that would be an indication of an engulfing pattern to the downside. But we do still have all of these little levels right here. We've got the Fibonacci level of the 23, the extension 23 Fibonacci level, very close together, and that 50 is right there, that 50-day moving average coming right in line with that, having this 9-day moving up there. Again, everything peeling in very close. So no matter what people are looking at, those things are going to act as support. But if the bears really come out in force, we could really see that exacerbated to the downside. Now let's look at the E-mini S&Ps. Very similar situation. It's the 50 extension here that it's lining up with. But as you can see, we settled above that yesterday. Today peeled right through it back into the value area. And we have the 50-day looking right there. It came down, kind of touched it, and bounced away as support. So all of these charts starting to look a little bit toppy here, especially in the E-mini S&Ps with this confirmation. Now, of course, we have to wait to the end of the day. I'm just saying that if we saw this settle here now at the end of the day, that would look very bearish to me. All right, on to the 30-minute chart. This is 30-minute candles on a daily basis. Each one of these blues is a daily bar, or a daily segment, I should say. And as you can see, overnight inventory started getting short, and open of the day session really didn't care. It was like, let's get out of some of this stuff. And we saw this accelerate to the downside. Just a corrective move here as we've slowly kind of grinded up. We're starting to see a little bit of a waning to the upside here. It looks like the bears are starting to take a little bit of force here. And bonds coming off quite dramatically today with the equities coming down. I was even going back and forth on Twitter with a couple of people that bonds are no fun to watch right now. Made a nice move today below the 50-day moving average. So we could start seeing the bonds start to come off as maybe they're starting to believe that the FOMC is going to continue to raise interest rates. All right, on to a few trades that I've done with American Express, which is ticker symbol AXP. I played this to the upside. I'm talking about with interest rates. We've been talking about all of these different nuances with the consumer, the retailer, how we're not really seeing wage inflation, but we are seeing inflation and retail spending going up here in the United States, which can only really lead one to believe that the retailer is buying a lot of this stuff on credit, which is going to help out Visa, MasterCard, and American Express, obviously. So I played this to the upside on that theory. Went into the April that expire tomorrow. Sold the April 91 puts in there for 49 cents, was able to buy them back for 3 cents this morning. So a nice win there. I tried to get that in as a spread in my IRA and was chasing it for a little while. I actually went all the way down to trying to offer 40s in I think it was like the 91.71 put spread, but I couldn't get that off. Can't remember exactly what my defined risk aspect of that was, but as you can see with yesterday's market move, it was pretty unabated to the upside, especially towards the end of the day. And I got my margin account in early because I didn't have to worry about that spread, put in the spread, and it just never really got hit. People were running away from it. So I stopped chasing that, unfortunately, but it did go to the upside. And on some of the other ones, they just didn't really look that good to me. One thing that I am a little bit, actually, let's talk about the couple of trades that I'm looking at. Honeywell, which is ticker symbol HON, probably, I don't know. I'm thinking I'm going to play this to the upside. I was going to stay away from that because I was going to play GE to the downside, and I was going to play GE to the downside, but I don't know if I'd get very much premium for selling that short, so I might stay away from that one. The other one was Procter & Gamble. I've been waiting on. Wanted to play this to the downside, and they came out with earnings this morning. Morningstar tells me that it's coming out tomorrow morning. Well, they came out this morning. So I missed that one. A little bit annoyed with myself and Morningstar, which I would have expected to have that right, but they messed up on their on their earnings calendar and said it was today, which it wasn't. So That's about it. That's all I've got going on so far. I am going to be looking at, like I said, those other couple of earnings trades, most likely Honeywell, because I don't think it's worth trying to short GE at this point with it being so small, not a whole lot of premium for the risk, especially my risk to the upside versus the downside. All right, so I'm going to probably stay away from that. Obviously can't trade Procter & Gamble, so I'm going to be going probably with Honeywell. And that's about it for today. Friday's webinar is going to be on Poor Man's Covered Put. Should be a really good one. Also, give me a thumbs up, thumbs down, like, dislike. If you give me a dislike, let me know why. Otherwise, I can't fix anything. So I want to make sure that you guys are getting the most out of these daily market commentaries. So give me some feedback. Let me know. All right? That's all I got for you guys today. Other than if you can't take that, take it easy.